Good evening, everyone, and welcome to today's webinar. The past month has been one of the most volatile, in my view, one of the most significant periods in recent market history, although the indices appear to be trading within the range. There was tremendous action beneath the surface. We witnessed crude oil swing dramatically between nearly $100 to $70 per barrel. The Indian rupee weakened sharply, touching around 96.5. Currently, it is at 95.30. While the global equity markets experienced volatility of nearly 15 to 20%. Our own markets also went through a phase of capitulation, with the Nifty slipping to around 23,600 when the crude spiked close to $100 per barrel. These levels are not just numbers, they are likely to become important reference point that could determine the market's next major trend. The obvious question, what triggered these sharp moves across global assets and what do they mean for Indian markets going forward? To help us understand the macro backdrop and the key drivers behind these developments, we have with us Mr. Arun Agarwal. He will take us through the global events, their market impacts, and what investors should watch in the month ahead. So, over to you, Arun.
Thank you, sir. In this presentation, we'll do a little recap as to what happened to the global markets and Indian markets in the month of July. Then we'll talk a little bit on the global macros, and then we'll move on to the Indian markets and outlook and valuation part. Next slide. Yeah. So this particular slide showcases how the global markets moved in July, and you can really see the kind of divergence one and the kind of volatility there in the market. On one hand, there were markets which gave 13% return. On the other hand, there were markets, and these are all indices, which gave South Korean indices, Kospi was down 22% during the month. Overall, the month, we can define this by two broader points. One is the US-Iran geopolitical tension, and the other being the semiconductor and AI related sell-off that we saw in the last month. While even in the US, when you look at NASDAQ, you look at S&P and you look at the Dow Jones, there too we saw a little bit of divergence, where NASDAQ, a tech-heavy index, saw a larger decline, whereas S&P 500 was flattish and the Dow Jones Industrial was marginally up. The main action happened more on the Asian markets, where Hang Seng surged 13%. But look at China, look at look at China, Japan, and South Korea went down significantly during the month. Even Taiwan was down around 6.5% to 7% last month. In this entire midst, the Indian market demonstrated consolidation and resilience in July. And this was despite the large sell-off or the volatility that we saw in the global markets. The benchmark indices of India, they successfully absorbed the pressure from the temporary spike that we saw in crude oil prices, triggered by the escalating US and geopolitical event. Like Shrikant also mentioned, that how crude oil prices saw a major swing and how markets came under pressure for a brief period of time. But again, the overall strong macro fundamentals and steady corporate earning numbers supported the markets, and the markets ended in the green. Overall, even the domestic institutional investors, as we have seen the trend over the last almost 2 years now, they have been absorbing the foreign pressure as a robust net bias. While the FIs, I just like to highlight this specific point, the FIs selling intensity in the cash market in the Indian markets have been decelerating or coming down over the past 4 consecutive months. We saw a peak selling that happened in the month of March, but ever since in April, May, June, and July, last 4 months, we have seen that intensity has gradually come down. Next slide. Here we'll talk about how the sectoral indices performed. So we had a brief look on how the major global and Indian indices did. Even the sectoral indices saw major divergence. On the positive, we had BSE IT index gaining 15% in July 26, after the index being under pressure for the past few months now. The improvement or the growth in the indices can be linked to the broadly inline Q1 results and also the attractive valuations at which a lot of stocks are trading. The real estate index also saw a good up move. This was because of positive management commentary on growth outlook, and also again the valuations are attractive in this space as well. Auto index, the third index that saw, another index that saw a strong pullback this month. We are seeing a lot of, strong volume growth over the past, many months now, ever since the GST rate cut came in. And even when you look at the, July month volume, which came on Friday, there to be again, or the weekend, we have seen, how strong the volume growth has been for the auto sector, and that's getting largely reflected in how the index has performed. On the other hand, we have BSE, capital goods, industrials, and utilities. These indexes underperforming the market. Next slide. Now let's look at how exactly, what exactly has been impacting the market. One, we talked about how the escalating Middle East, conflict has ignited fresh volatility across global equity as well as energy markets in July. The Brent and crude, as we talked about, they saw a sharp increase, though they have cooled off relatively from the peaks that we saw last month. But again, the overall Middle East scenario continues to remain volatile. India, meanwhile, during this entire crisis, showed quite strong resilience, and this was because of domestic institutional inflows and healthy corporate earnings, as we talked about. In our base case of crude oil price, where we are estimating this to be around $85 per barrel at this point in time, we expect the SCAD to GDP, that's current account deficit to GDP, at around 1.5%. India's overall macroeconomic outlook appears to be manageable at this point in time, but it could deteriorate in the event of prolonged conflict, or vice versa. It could also improve if the case of, if there is a de-escalation in the US-Iran war. So that's one thing I think we have to keep a watch out for. The markets has been reacting very sharply to these news flow which is coming on the US-Iran war. Indian markets too have been reacting to it. I think the near term would continue to track the developments there, and accordingly the performance of the market would be dependent upon how or what exactly is happening on the Middle East side. Apart from that, we believe the economic and political compulsions, though, should restrain both Iran and US, from indulging in a pretty long conflict. And at this point in time, we maintain our constructive view on the Indian macros, despite the recent escalation in the West Asia war. Next slide. IMF in July came with their World Economic Outlook, where they shared the growth estimates for all the economies, and for the world as such, they are talking about a growth of 3% in calendar year 2026, that this calendar year, and next year they're anticipating that to move to 3.4%. On the inflation side, the IMF has said that they have revised their estimates slightly upward, and that is because of the energy volatility. And next year, though, they are anticipating the headline inflation to come down. For US specifically, the growth is projected to be around 2.3% in calendar year 2026. In fact, US declared their Q2 GDP numbers just last week, where the annualized growth rate was around 1.5%. The US economy, when we look at, they actually remain relatively resilient because they are largely insulated from this entire energy exporter status, and they have their own they are a net energy exporter, so they are not overtly impacted because of the sharp increase in the crude oil price and also the technology related private sector investment. So that's kept their economy relatively resilient. India, meanwhile, the IMF projects, the economic growth for India to be around 7% for calendar year 2026. That's around 6.4% for FY27. And India will continue to stay as the fastest growing major economy, ahead even of China. China is projected to grow at around 4.6% in this calendar year. So unlike, economies which are heavily dependent on external technology, cycles, India's expansion is largely led by the robust domestic demand, strong private consumption, as well as the resilient service sector that we have. So while India retains its growth leadership amongst the major economies, as we talked about, the global elevated crude oil price and any supply chain impact from the Middle East, that remains a key risk to the inflation as well as these numbers. Uh, as per our estimate, we are looking at GDP growth of 6.5% this year. This is a real GDP growth, and next year we are looking at 7% GDP growth. On nominal terms, when we look at, we are expecting a nominal GDP growth of 12.9% this year for India, and in FY28, we are looking at around 12% nominal GDP growth. Yeah. Next slide. On the global monetary side, when we look at how the major central banks which had their policy in the month of July, so what were the policy action from their end? We can see in the slide, the US Federal Reserve, the European Central Bank, the Bank of England, and the Bank of Japan, they all had their policy meets in July. And the common theme we can see from the slide there is that everyone kept their policy rates unchanged. So global central bank paused rate cuts. This is due to stalled disinflation. This again, is driven by the Middle East crisis. The collective actions right now uh, of the world's major central bank, they showcase a coordinated shift towards a wait and watch stance, monetary stance, which is common theme across all the central banks at this point in time. Now, this specific pause signals that the borrowing cost will remain higher for now until we see firm inflation is firmly under control. So for the time being, we could see most of the central banks will continue to be in a wait and watch mode, see how the situation pans out, and then accordingly take actions on the interest rates. Next slide. Coming now to India. So India's inflation number, when we look at for the month of June, which came in July, the retail inflation increased. We had an inflation of 3.9% in May, which increased to 4.4% in June. Now, this was largely because of higher food and fuel cost. The core inflation, though, remained stable, which was around 3.9%. But because we had some petrol and diesel price increases announced earlier, so the impact of that came in the month of June. So that was one part reason why we saw increase in inflation in June. The other being that we also saw the impact of weak monsoons that became evident, and as we saw a pretty sharp rise in vegetable prices in June. Now, going forward this year for FY27, we look at the retail or the CPI inflation number to be around 5%. Now, this is pretty much higher as to what we saw last year, but the base again is low one. And then again, we are seeing, few escalation in some of the commodity prices and also weaker monsoons. So this year we are looking at 5% CPI inflation number, and this could actually move to maybe 5.7% also if the situation becomes adverse. But at this point in time, we are factoring in the headwinds from the El Nino led price increases, and also if there is any possible resurgence in the crude prices. But if the impact is beyond what we are estimating, then the inflation could actually move towards or maybe 5.7%. So to determine from the RBI side now, the inflation numbers, have increased, but they still are broadly in the comfort band of the RBI. But now for the next policy move for the RBI, the central bank will closely monitor few critical things in our view. One, they'll watch out for the potential anchoring of inflation expectation. The second, they'll also see if there is any reversal in the retail fuel prices if the crude prices come down further. The third is a trajectory of the food inflation, so how it's going to be. And fourth would be the extent of input price pass through into the final goods. So we are seeing, a lot of sharp increase in commodity price. So how they are passed into final goods, that also would be seen by the RBI. So given the current low real rates at this point in time, we are expecting maybe a 50 basis point rate hike that could happen, possibly starting from December. But however, unless we see disinflation or the inflation numbers coming down and CPI inflation numbers coming down, then maybe we might not see those numbers. But if the situation remains where they are, we are expecting a 50 basis point rate hike that could start possibly from December month or December policy. Next slide. Monsoon, again, a critical factor. We talked about two major headwinds for India currently. Well, a lot of macro factors are positive, but two things which are a bit of challenge. One was the crude oil prices or the inflation numbers we talked. Now is on the monsoons. Now the rainfall was very, very poor in the month of June. It was 40% below the long-term average. However, July saw a big relief where we saw July rainfall being 3.5% above long-term average. So by July end, the cumulative rainfall was 13% below long-term average, whereas it was much higher, at the month of or the initial weeks of July. So on a cumulative basis, though we saw, the July, rainfall to be higher, and the shortfall being lower now. However, the rainfall distribution remains pretty mixed now. Now, rainfall was good actually in central and northwest part of India, but east, northeast, and south India. Now, these three regions actually saw deficient or weaker rains. Just to give you another number, there are total 36 subdivisions. 17 have received deficient rainfall. 16 have received normal rainfall, whereas three regions or subdivisions have received excess rainfall. So even the impact of this when we look on the sowing. So when we look at the data as of say July 24, the total Kharif acreage has been actually lower by 4.7% as compared to same period last year. And even the basins and the reservoir levels are around 7% lower below the long-term average for the week ending July 30th. Now, these lower reservoir levels can have an adverse impact on the Rabi crop cycle. So that's the next crop cycle. So it's we would hope for the monsoons to be good for the month of August and September. But having said that, the El Nino conditions have strengthened, and the neutral in IOD conditions continue to prevail. So we'll have to wait and watch, how these pans out. But I think we are anyways anticipating and expecting the monsoons to be weaker, and we are factoring a fair bit of that into our numbers as well. Next slide. So July was a month where we saw the Q1 numbers coming in. Overall, at the start of this result season, we were expecting the overall Q1 numbers growth for BSE 30 index companies to be 4.8% on the net profit side and 9.8% for Nifty 50 companies. However, the numbers have actually come in better than expectation. So that's a big positive amidst all the noise that we are seeing around the geopolitical issues. So that's one good part, that's happened, and that has, one of the key reasons we believe where the market has received or been, relatively resilient as compared to the global markets. Now, we expect, fairly robust growth in net profits for Nifty 50 index, and even our own coverage universe for FY27, we see, because of some low base in some of the sectors and also continued strong activity in others, we see a fairly robust growth. We are looking at 18% net profit growth for Nifty 50 companies this year, and next year we're looking at 14% net profit growth. So that's a pretty good growth that we are expecting or anticipating at this point in time. The healthy Q1 financials and also the better than expected earnings growth across several sectors that we saw, it in our view should provide greater comfort to the market's corporate earnings outlook, and this robust performance is expected to reassure investors in our view, and even stabilize earnings growth expectation, and these should offset the overall broader concerns that we talked about, like monsoons and also the global inflation. Next slide. Let's look at our outlook and how the markets are valued at this point in time. So overall, the Indian economy, as we talked about, seems to be holding up relatively well at this point in time, with most of the high frequency indicators. Now they're suggesting either steady or improving growth outlook across sectors. Specifically, we have seen a pretty sharp increase in the industry credit across sectors, which suggests there's a broad-based pickup in private sector investment. We expect the momentum should continue as private sector invest aggressively, largely in the value-added manufacturing of say chemicals, electricity, electronic chains, and also encouraged by supportive government policies. When we look at the government's overall we expect the fiscal deficit also, when we look at Q1 fiscal deficit numbers, so they also reflected pretty healthy direct tax growth and robust capex spends. And we expect the center's fiscal deficit number to be around 4.3%, broadly in line. Maybe a 20 to 30 bips of slippage could be possible in case there is an elevated energy or commodity prices for a fairly long bit of time. Uh, Overall, the company came out is, investing a lot and, through PLI schemes. And we also saw another PLI coming in the month of July as well. So the government's focus on manufacturing continues there. And even on the export side, in July, in fact, the UK and India FTA or came into force, and we have already signed few more FTAs which will come into force in the coming months and quarters. We believe these initiatives on the FTA side should also has the potential to transition India into a highly competitive market globally. So the government is investing a lot on manufacturing. They're focusing a lot on manufacturing, and we are also focusing a lot on exports. So maybe the markets we know is in a consolidation mode for the last almost close to 2 years now. But a lot of these events we believe will bear fruits going forward. Uh, as these numbers start to flow into corporate earnings. Next slide. Yeah. So this is on the valuation side. Overall, Nifty 50 index as this point in time, because we have seen a 2-year consolidation, we see the index trading at a relatively reasonable multiples after the re-rating we have seen in some of the sectors. However, there again, between sectors there is wide variance in valuations. Again, when you talked about the Nifty 50 earnings growth for companies, the 50 companies of Nifty, we are looking at 18% growth this year and 14% growth next year. And in terms of valuation, again, we talked about how the valuations are moderated. So on FY28 estimates, the Nifty 50 is trading at 17.1 times, which is attractive. In our view, most of the banks actually are trading at, quite an attractive valuations. And we continue to prefer stocks which have compounding in earnings, which shows earnings compound and also have got lower risk of derating in multiples. So these are some of the stocks that we generally prefer at this point in time. We'll be sharing some few, stock ideas with you. I'll start with one. Next slide. Yeah, next one. Yeah, so I'll start with one of those ideas. One is Amber Enterprise, and the others will be covered by my colleagues. So Amber Enterprise is a company which largely have always, in the past been focused on the room AC segment. So they used to make different parts of the room AC segment, or even the entire unit, and supply it to the AC players. Over the last few years, the company has been steadily changing their product profile or increasing the non-AC revenues as well. Recently, the company also entered into a manufacturing collaboration with Oppo India to manufacture mobile phones. When we look at Oppo collectively accounted for almost 25-26% share in calendar year 25. So that's a big customer that they have added in the mobile phone segment. Uh, Amber's entry, we see, this entry into the mobile manufacturing, it, again, as we talk about how they're diversifying the revenue, so this will further diversify the revenue away from the room AC business. Now, room AC business or the room in AC industry is pretty strong, but the only issue with the room AC industry is it's pretty seasonal. So, you'll see 2 quarters of very strong earnings and then couple of quarters, where the earnings will be soft generally towards the winter side. But this will help reduce the seasonality to the earnings for the company. So Amber at this point in time, now they boast of one of the most diversified electronic portfolio. This includes consumer facing segments like we talk about the RAC, the industrial products, and also backward integration into components. So scaling volumes in line with guidance and backward integration, we see this to be long-term trigger for the company. We expect the company has got good runway to grow even from now in terms of their earnings. We are positive on the company. We have a buy rating and a fair value of 8710. So that's on Amber. I hand over the call to my colleague.
Yeah, thank you. So our next pick to be from the AMC space, in HDFC AMC. So the company is one of the largest mutual fund manager in the country with around an total AUM of around 2.3 lakh crores. It caters to various retail clients by investing their money in debt funds, equity funds, or PMS funds and other avenues of the company has been offering. Talking about their latest result, they have delivered a 10% YOY growth in earning, which and majorly led by the mark-to-market gains due to the significant rise in Nifty small cap and mid cap indexes. The headline profits increased 11% YOY. Uh, Talking about the company. It has a total market share of around 12.7%, making it one of the top mutual fund houses with a average monthly SIP of 4,800 crores. The talking about the SIP trend over the months has been constant, which is around 30,000 crores, and we haven't seen an early signs of uh, mutual fund outflow. There has been an inflow for over the month, so which states that the investing trend which has been is being seen very strong in India, which would help this company. Talking about the operating performance, the company's operating leverage has been pretty decent with a bit increase in the employee expenses. Whereas the fund performance and the talking about the fund performance, which has been stable and beating the benchmark indices for majorly all of their offerings. Talking about the yield side, the equity mix has increased for the company to 66%, which has led to an increase in margin from 45.3 to 47 basis point. And largely the constant inflows the company has been receiving has been pretty steady and growing at a steady rate. All these things makes us positive for the stock, for which we have an ad rating with a fair value of 3,000. Over to Pankaj, sir.
Thank you, Gaurav. Good evening, everyone. So the next stock that we are discussing is L&T. L&T, of course, is India's largest infra and capital good company. But if you look at the current order book, more than 50% of the order book is coming from the international market, and with a large share coming from the Middle East. And Middle East is currently, is in news due to all these ongoing the Iran-US conflict. But if you look at, of course, these have some impact on the sentiments, and we have seen the stock has also seen some correction. But if you look at our overall performance, the recent quarter Q1 numbers, the company has reported very strong order inflows, roughly 14% YY growth. And if you look at a large part of growth has come in from the domestic market as well, and infra, particularly from the infra segment. Though some softness we have seen on the energy segment side, but overall order book looks quite strong at 7.8 lakh crore, which gives the very strong revenue growth visibility. When we look at the Q1 number, of course, there was some weakness in the execution, and that had an impact on the margin, but the PAT was higher at 16% YY growth, led by higher other income. If you look at the management guidance, they have maintained 10 to 12% revenue growth and the order inflows guidance. And this is on the basis of a very strong order pipeline of roughly 15 lakh crore. And on the Middle East, the management said that they are quite comfortable in terms of outlook. They expect good order inflows from second quarter onwards. Even in the energy segment, they are expecting improvement in the order inflows in the coming quarters. So all in all, in terms of outlook, everything is on track. And the management has even retained the guidance also on the EBITDA margin side. We expect a 24% growth in the core earnings, and that way it is quite healthy. Looking at the valuations, it's quite attractive as well post correction. We arrive at a sum of the parts based fair value of 4250 on L&T, and we have an ad rating on the stock. Over to you.
Thank you very much. Thank you very much. Moving on to Indus Tower. Indus Tower, we recommend buy with a fair value of 480 rupees. India's telecom infrastructure growth story is accelerating. Indus Tower is entering a strong growth phase, supported by improving industrial fundamental, a healthy order pipeline, and diminishing legacy concerns. तो तीनों बहुत important factors हैं. आपका industry growth हो रही है, which will support your growth automatically. Company strong growth phase में enter कर रही है. Order pipeline काफी healthy है. और जो legacy concerns थे Vodafone से related, they are also diminishing. तो factors are quite supportive. अगर अपन देखें कि quarterly numbers कैसे आए थे company के, तो we have seen steady execution in Q1. Adjusted EBITDA grew 5.7% year on year and 1.4% sequentially, broadly in line with expectation, reflecting resilient operating performance. प्राइसिंग कैसी कर रही है कंपनी? एवरेज रेवेन्यू पर टेनेंट रिमेन स्टेबल, कोई डिक्लाइन नहीं देखा गया है एट 41,000 रुपीज, roughly around 41,000 rupees, indicating sustained pricing discipline, healthy tenancy economics. जैसे कि मैंने बताया, वोडाफोन ओवरहैंग is largely behind. Receivables and bad debt provisioning related to Vodafone Idea are now largely resolved, significantly reducing a key investors concern. तो हर जना इन्वेस्टर को ये लगता था कि वोडाफोन से पैसा आएगा कि नहीं आएगा, तो वो अब कंसर्न्स नहीं दिख रहे हैं. Strong growth visibility, management expect accelerated tower rollout over the next 3 to 4 quarters, supported by a robust order book from the telecom operators. हमें आगे जाके क्या देखना है कि द पेस ऑफ वोडाफोन आइडिया नेटवर्क एक्सपेंशन कैसे remains linked to this fundraising and capital expenditure plan, making it a key variable for long-term growth story. With Vodafone receivables largely behind, a visible tower rollout pipeline, improving industry capex, and emerging industrial opportunities, Indus Tower is well positioned for sustained earnings growth and strong cash generation. We retain our buy rating with a fair value of 480 rupees. That's all from my side.
Yeah, thank you, Sumit sir. Hello to all. Ujjivan Small Finance is the next stock which we like and we find it quite attractive at these levels and at this macro junction. Firstly, Ujjivan Small Finance is a small finance bank. It's a mid-sized lender. So इसकी अगर हम gross loan book देखें तो that is close to 43,000 crore. And this loan book जो है it is 50% secured, 50% unsecured. And ये बैंक का जो presence है it is quite present in almost all the states and it has its presence in more than 100 districts into India. Now coming back to the loan mix जो ये बैंक का है, so ये जो 50% unsecured part है, इसमें से the major portion is of small ticket loans which are unsecured in nature. Now ये जो segment है in the past 10 to 12 quarters was under immense stress, microfinance segment जो है for the entire industry. And therefore, naturally, जो भी lenders have which were exposed to this particular segment, they were facing the brunt. And therefore, पूरे industry में there was high stress, there was high slippage, and there was also high NPA. So Ujjivan was also one of the bank. But it is important to note that Ujjivan was one of those banks जहाँ despite such bad times for the entire sector, they actually reported better results than most of its peers. But yes, as they were into this segment, they were also going through some burnt. But as we speak now in Q1 FY27, the most of the stress which this segment was dealing with is now behind us. So अगर हम उज्जीवन का ही example ले, they had a slippage ratio which was as high as 4.6% level. But in Q1 FY27, they reported a slippage of 1.7% level. So 4.6 से 1.7% से उनका slippage decline हुआ है, which is a very healthy decline in their slippage ratio. We are of the opinion that going forward, now that the MFI stress is behind us, Ujjivan will now be on track to delivering higher growth with good NPA numbers, and this is already reflected in their Q1 FY27 results. So अगर हम इनका Q1 FY27 results देखें, they have reported a loan growth of close to 30%, and on back of this, इनका जो NII growth है, that is close to 39%. A YOY. PAT, on the other hand, grew multifold on a YOY basis, and also on a sequential basis, it had a growth of 12.3%. So healthy numbers have now started to kick in, and we can see in the numbers from Q1 FY27. Also, their gross NPA ratios are continuously on a declining trend. Going forward, we are expecting this healthy growth momentum to continue for Ujjivan Small Finance Bank. Macro environment is now stable for the segment which they are into. Growth has started to pick up, will continue to pick up, and the valuations are quite attractive for the fundamentals it offers. And therefore, it's an attractive play on the MFI segment. The market has already started appreciating it, and we are of the opinion that the sustained results which they will be showing quarter on quarter, the upward momentum in the stock price should also continue. And therefore, it's a stock which we like. We have a buy rating with a fair value of 85. So that was on Ujjivan. I hand over the call to Rini now.
Thank you, Veer and team. So that was a presentation for the stocks and strategy for the August month. We will now open the floor for Q&A session. So ask your questions now. So I see we already have quite a few questions on LIC. So I would request my BFSI analyst Gaurav Bhandari to address the query on LIC, please.
Yeah, thank you. So if you look on a 2-3 months back on a rollover ride, so the government came with the GST rationalization for the life insurance policies, which led to good AP growth for the for the life insurance space, but the insurance cost, whereas the GST inputs which the company received came as an expense, which hampered their VNB margins for the company. So due to this and the overhang of the commission, uh, one of the commissions, you can say commission on commission cap by the regulators has been an overhang for the all the insurance space, which has led to an underperformance on the whole pack. For talking about LIC specific, the company has reported is going to report its number in the coming week. We expect good AP growth and VNB growth, whereas VNB margins would be a key watch out as what would be the key would be a key watch out as how the company has done in the non par segment. The recent stock correction has majorly been due to an OFS announced by the government of around 30,000 crores, which has been fully subscribed. This does not change the long-term view as the business has been, the company has been reporting good growth, good AP growth. So we have a positive view on the stock with a fair value of 663 rupees. Thank you.
Thank you, Gaurav. Now I'll go to my auto sector analyst, Arun Garwal. So, sir, with the recent run-up, how should we look at the auto sector?
Yeah, as we talked about how the auto index actually had a pretty sharp run up in the month of July. And see, auto space has been gaining momentum in terms of performance ever since we saw GST rate cut last year. The volume growth has been very strong ever since, and continues to remain so till date. The only issue which the sector faced in between was because the commodity prices saw a pretty sharp increase, and that's somehow, because of that, the margins were impacted in between for the auto companies. But we believe the overall outlook in terms of volume growth continues to stay positive. Maybe, once we are past September, so in second half, we may not see, we will continue to see growth, maybe not as high as what we are seeing today because the base becomes pretty high. But as a sector, as a whole, we will continue to see volume growth for the auto sector going forward. Margins again would be contingent upon how the commodity prices behave in the near term. But overall, from a longer term perspective, the companies are, gaining a lot of efficiencies, with respect to improving margins. In this space, yes, the auto stocks have seen a sharp run up again here, but we do like names like say Mahindra and Mahindra even at current levels. Some of the other stocks that we like include Saisha Motor or Maruti and even TVS Motor. But again, these three stocks which I mentioned now should be looked on corrections rather than at the current market price because the movement has been relatively far more sharper in these stocks. Broadly, we are positive on the sector, but in terms of stock, we are selective. As we talked about, we are positive on some of the names we already discussed now.
Thank you. Another stock query we have is on Shriram Finance. For this, I'll go to Veer. Veer, would you like to share your views?
Yeah. Uh, so Shriram Finance is a stock which we do like, and we are of the opinion that it would continue to deliver smooth performance going ahead in the medium term. Quite a few positive news flows have come into the NBFC. There was a serious foreign funding which came into Shriram Finance. Also, the fact that they have now been delivering quite steadily on their numbers. So, if you look at their Q1 numbers, they delivered an inline a set of a number where they grew their loan book by close to 15%. The earnings grew by 60% YOY, which came in above our estimates. The net interest income grew by good 34%. So on the fundamental side, they have been delivering quite good. Also, their key segments, which is the CV segment, and also and also the segment which is the mid-sized business loan segment. Both of these segments are also doing quite well. So this would also bode well for them in the medium term on the growth side. We are of the opinion that they can continue to deliver close to 17-18% on the loan growth side with good NPA ratios. And certainly, and therefore, it's a stock which we like. It is turning out to be a very good NBFC. So we have an ad rating on Shriram Finance with a fair value of 1150.
Thank you, Veer. Now I'll go to the last question. Due to the time constraint, I'll have to take this as the last. So we have a query on DLF. Pankaj sir, would you like to address the query?
Yeah, sure. So, DLF, if you look at this Q1 was weak in terms of pre-sales as well as the revenues which the company has reported. Uh, Weak pre-sales, roughly 6,600 crore versus last year's more than 11,000 crore, is on account of the launches that we have seen the last year base. We had a big launch where the company had reported such a huge pre-sales. But in this quarter, there was the absence of launches. But that leads to a asking rate for the next 3 quarters to be very high. Of course, the company is having a good launch pipeline, and they're targeting 20 to 22,000 crore of pre-sales for the full year. Even the quarterly numbers were also relatively weak in the absence of any major contribution from the completed projects. So due to that, we have seen a decline in the numbers. But valuations look attractive. There's of course a big annuity assets and big land bank that the company is having. So that will drive future pre-sales and cash flows also will come. So overall, we are positive on the stock. We have a current fair value of 950 rupees. So we'll review post the earnings con call, which is going today.
Thank you, Pankaj sir. Now I would request Shrikant sir to give his closing comments.
या श्योर। तो देखिए, वैसे मार्केट के अगर हम ओवरऑल ट्रेंड की अगर बात करें और जो भी हमने हमारे मंथली स्ट्रेटेजी में इंक्लूड किया था, बेस्ड ऑन दैट अगर हम मैक्रोस की या फंडामेंटल्स की बात करें, तो एक बात क्लियर है कि मार्केट ने अ, बहुत सारे ऐसे इवेंट्स को डाइजेस्ट कर लिया है, जिसकी वजह से हमें लगता है कि मार्केट में डाउनसाइड लिमिटेड है। सबसे बड़ी बात यह है कि गवर्नमेंट हैज स्टार्टेड टेकिंग एक्शन ऑन दोज थिंग्स वेयर वी आर लैकिंग। तो जैसे कि इनफ्लोस थे, वो इंडियन मार्केट्स के लिए कम होते जा रहे थे। इनफैक्ट कंसिस्टेंटली आउटफ्लो हो रहा था और वो आउटफ्लो के नंबर्स बढ़ गए थे। उसका सबसे बड़ा रीजन ये भी था कि जो एशियन मार्केट्स थे हमारे साथ, इमर्जिंग मार्केट्स, वहां पे अनयूजुअल एआई ट्रेंड की रैली बनी थी, और जिसकी वजह से क्या हुआ था कि वहां पे काफी सारा इन्वेस्टमेंट पहले हुआ था। यूएस में भी हमने देखा कि मार्केट्स अच्छे ही थे और यूएस का बॉन्ड यील्ड बहुत ही स्ट्रांग है। ऐसे केस में क्या था कि आउटफ्लो बढ़ना था और आउटफ्लो बढ़ते जा रहा था, बट गवर्नमेंट ने एक एक्शन ली और एक रिफॉर्म लाया, एफसीएनआर उन्होंने इंट्रोड्यूस किया। बिकॉज ऑफ दैट $40 बिलियन का इनफ्लो हुआ मार्केट में, और एक्सपेक्टेड है कि इसी पर्टिकुलर जो फंडामेंटल डेवलपमेंट है, इसमें अगर और मोमेंटम अगर पिकअप होता है तो हम शायद $100 बिलियन भी एक्सपेक्ट कर सकते हैं। तो यहाँ से अपनी जो करेंसी है, सबसे पहले उसके ऊपर एक हमें लगता है कि थोड़ा सा जो फॉल हो रहा था उसमें एक लगाम लगेगा, एक ब्रेक लग सकता है। 96.5 के करीब हमने करेंसी को वीक होते हुए देखा था, अभी 95.30 के करीब है। और एफआईएस जब भी मार्केट में आते हैं तो मार्केट दे ऑलवेज सी वेरी फर्स्ट कि मार्केट, जो भी मार्केट में वो इन्वेस्ट कर रहे हैं उसके करेंसी का ट्रेड क्या है। तो यहाँ पे आफ्टर वेरी लॉन्ग टाइम और शॉर्ट टर्म में अगर आप देखें तो इन लास्ट 6 मंथ्स हमने एक बड़ा डेप्रिसिएशन भी देखा था करेंसी में। तो ऑन इमीडिएट बेसिस बहुत ही बड़ा वीकनेस करेंसी में आ जाए ऐसा नहीं लगता है, अनलेस एंड अनटिल की क्रूड तो वापस से $100 के ऊपर ट्रेड करना चालू कर दे। तो फॉर द टाइम बीइंग ऐसे लग रहा है कि मार्केट ने बहुत सारे इवेंट को डाइजेस्ट किया हुआ है और मार्केट यहाँ पे एक अपना बेस बना चुका है। सो सबसे पहले बेस बना 22,000 का, उसके बाद बेस बना 23,000, और अभी जो रिसेंटली जो बेस बना है वो 23,600 का है। फंडामेंटल्स टेक्निकल्स को देखते हुए मुझे लग रहा है कि मार्केट में यहाँ से ग्रेजुअल अपवर्ड एक्टिविटी हमें देखने मिलेगी, और पॉसिबिलिटी है कि हम मार्केट में 25,200 के लेवल्स देख सकते हैं। यहाँ से जो भी करेक्शन आता है 24,200, 24,300, वहां पे हमें लगता है कि एक अच्छा बाइंग जोन है, और वहां पे कुछ आप इन्वेस्टमेंट करके चल सकते हो। जबकि लग रहा है कि यहाँ से मार्केट 1,000 पॉइंट चल सकता है, तो हमें लार्ज कैप स्टॉक्स पे वापस फोकस करना है, और इन्हीं में हमें लगता है कि मोमेंटम और बनेगा। नो डाउट मिड कैप स्मॉल कैप में तेजी है, सिलेक्टिवली वो चलते रहेंगे, और सिलेक्टिवली आपको भी ट्रेड करना है। लेकिन जो भी फंडामेंटली स्ट्रांग कंपनीज है, जैसे आज हमने हमारे अपडेट में भी कवर किया है और हम लोग मोस्ट ऑफ द टाइम कवर करते हैं, अगर आप उन फंडामेंटली स्ट्रांग कंपनीज के साथ रहोगे तो आप डेफिनेटली जो बेंचमार्क है, जो निफ्टी है, उसके जो रिटर्न्स है उसको आप डेफिनेटली बीट कर सकते हैं। आई थिंक वही हमारा ऑलवेज एक गोल होना चाहिए, और उसी के बेसिस पे हम भी यहाँ पे आपको रिकमेंडेशंस देते रहते हैं। तो यहाँ से अगर मार्केट बढ़ना है लेट्स से 1,000 पॉइंट्स, तो आपको बैंक्स पे फोकस करना है। यहाँ पे हमें लगता है कि कुछ मेटल स्टॉक्स में भी तेजी आ सकती है, क्योंकि अगर यूएस और ईरान के बीच अगर जो तनाव चल रहा है, अगर उसमें अगर कोई भी पॉजिटिव इंडिकेशंस अगर आते हैं, तो डॉलर इंडेक्स यहाँ से थोड़ा सा और वीक होते हुए नजर आएगा, और ऐसे केस में मेटल्स में अच्छी तेजी बन सकती है। तो उसमें हमें लगता है कि मेटल्स में जैसे हिंडाल्को है, नाल्को है, साथ ही साथ जिंदल स्टील एंड पावर है, ऐसे स्टॉक्स में हमें लगता है कि मोमेंटम बना रहेगा। और जो फ्रेश इन्वेस्टमेंट्स आ रहे हैं वो हमने देखा कि पूरे लास्ट 2-3 मंथ्स में मैक्सिमम फ्लोज डाइवर्ट हुए टुवर्ड्स न्यू एज टेक्नोलॉजी या न्यू एज टेक प्लेटफॉर्म्स की तरफ पैसा काफी गया हुआ है। तो यहाँ पे हमें लगता है कि एक वो भी सेक्टर है कि जहाँ पे तेजी बनी रहेगी। हॉस्पिटल्स में तो हमने कई बार कहा है कि हमें हॉस्पिटल्स के स्टॉक्स अच्छे लगते हैं। अपोलो हॉस्पिटल हमारा टॉप पिक था, बाकी के स्टॉक्स में भी हमने अच्छी खासी अपवर्ड एक्टिविटी आते हुए दिखती है, तो देखिए हमें लगता है ये भी सेक्टर परफॉर्म करते रहेगा। ऑटो सेक्टर ये भी हमें अच्छा लगता है, लेकिन ऑलरेडी इसमें से कई सारे स्टॉक्स अपने फेयर वैल्यू को क्रॉस कर चुके हैं। महिंद्रा एंड महिंद्रा अभी भी हमें लगता है कि इन लेवल्स पे भी अगर लॉन्ग टर्म का व्यू हो तो इसे खरीदा जा सकता है। ऑन एंड होल, जैसे मैंने आपको अभी कहा कि ब्रॉडर मार्केट में डेफिनेटली अपबिट है, और ये मार्केट यहाँ से और भी अपवर्ड एक्टिविटी हमें दिखा सकता है। तो जो भी करेक्शन आता है उस करेक्शन में आप खरीदारी का ही व्यू बनाइए। दैट्स ऑल, थैंक यू।
Thank you, Shrikant sir. With this, we have reached the end of today's webinar. Thank you all for joining us. Have a good day ahead. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.